Good evening and welcome to Giving Forward, CFM's first annual celebration of impact. My name is Jay Philpott. I'm the Vice President of Growth and Development for the Community Foundation for Mississippi. It's incredible to see so many people here. And when I first dreamed of creating this event, I was just hoping for 3 people to show up. So to see, a half-full movie theater, we're really excited. We've got a great evening in store for you and a great event following as well. For the past 9 months, I've been inspired by the collective response and the strength of the nonprofit and the philanthropy community in our service area. From Friendsgiving, where our attendance was up 89%, to Giving Tuesday, where our income was up 74%, to the Placemaking Summit in Macomb, to the calendar year-end giving campaign where gift receipts in December were up 32%. What I found in Mississippi at the Community Foundation is that you all show up for our community, and tonight is no exception. Thank you. We have a lot to celebrate today on the doorstep of another successful fiscal year that closes next week on March 30th. However, before we continue with the excitement, we're thrilled to be in this fantastic venue. And I want to take a moment to thank the Capri Theater for allowing us to use this incredible space. And a heartfelt thank you to Valentina and her team. You'll see many of them tonight, so please give them a round of applause. To kick off our program, I want to take a moment to recognize someone else who consistently shows up, which is our key sponsor, the Thigpen Group. For more than 30 years, the Thigpen Group has provided objective financial advice and proactive planning to the greater Jackson area, helping people, as their motto and their website says, to live their best life. Doesn't that sound great? That's something we can all get excited about. They start by getting to know you and your passions, your purpose, and your legacy, and that's exactly what I've experienced every time I've had a conversation with Scott. The Thigpen Group specializes in financial and retirement planning, investment managing, estate and tax planning, business owner exit strategies, just to name a few. Scott is not only a trusted advisor, but he's a true champion of philanthropy. He holds the Chartered Advisor in Philanthropy, or CAP designation, a mark of expertise in helping clients weave philanthropy into their financial strategies. Now, if you're in the audience tonight and words and phrases like maximizing philanthropy resonate with you, please find me, and we'll go have a conversation with Scott during our program this evening. And we'll set up a meeting next week to go over that. Here's something special to note. Scott was the first donor and volunteer that I visited with when I started my employment with the Community Foundation. And on the very first visit, he agreed to be our premier sponsor for the Friendsgiving that we hosted in 2024. And he has already agreed to be the sponsor of our Friendsgiving in 2025 this coming November. Tonight's program, from this space and the rental cost, as well as the entire reception, is courtesy of the Thigpen Group. So let's give their team a big round of applause as well. Scott, would you come up? Thank you so much.
Thank you, Jay.
I'm glad to be here celebrating with you tonight. This is a great event. Congratulations to Jay and the whole staff for being able to pull this off. Look forward to many more to come. This is a rare opportunity that a lot of us at the Thigpen Group are here in one place. So if you would allow me, I'd like to recognize who's here. And I'd like to start first and foremost with my beautiful wife, Kimberly, who's here. Our son, Bowen, works with me, and he's right next to Kimberly. Krista Nicholson is next to Kimberly, and her husband, Tyler, is with us. Our Director of Client Services, Julie Humphreys. Julie, wave at everybody, does an outstanding job, and her husband, Kevin, is with us. Our newest member is David Martin, who's heading up our private client group. David, most of you know if you've been around wealth management in the Mississippi area for a long time, and his wife, Susan, is here. And then my other son, Peyton, is right here. Peyton is finishing his last year of fellowship in Jackson. and we taught our sons to marry up, and both of them have done an incredibly good job with that, just like their dad. But Peyton's wife is Mary Alex Thigpen, and Mary Alex is the executive director of the Greater Bellhaven Foundation and just doing an incredibly great job there. So glad to celebrate with you. I did want to make a quick plug for one other flyer that I'd like to mention. On your way in, if you didn't get one, you can get one on your way out. But this is a new charitable gift planners chapter that's starting in Mississippi. We're calling it the Magnolia State Charitable Gift Planners. So if you're interested in this, we have our kickoff meeting that's going to be May 6th at the Hope House. And a lady, a thought leader that's been in philanthropic endeavors for a long time, Tiffany House, that's on the national board, will be here speaking. It'll be a great event. So make sure you get a copy of this, and we're just trying to distribute this. I found out that if you're excited about things, you got to watch out. That may make you chairman of it. So I'm chairman of this new chapter, so I'm responsible for promoting it. But get the flyer, RSVP to it. There's no website yet, but it's in its infancy. But we're looking forward to celebrate with you tonight. Thank you for coming out, and thank you, Jay.
So we'll make sure that we have those flyers at the reception immediately following as well. So thank you to Scott and your team. I'm going to give you a quick overview. This evening is designed to highlight the power of philanthropy in shaping Mississippi's future. This new annual event brings together fund holders, donors, and community partners to celebrate the transformative impact of giving in Central and Southwest Mississippi. You're going to receive key updates on the Community Foundation for Mississippi's grants, investments, and community initiatives, along with an economic forecast from the Atlanta Consulting Group. Through meaningful conversations and insights, we'll explore how philanthropy continues to drive lasting change for good, forever. So that the evening moves smoothly rather than lots of shuffling at the podium, I'm going to give you a short overview of what's going to happen tonight, and then the speakers will just flow in order. I'll get things started with a brief overview of CFM and our work. For those of you who are a +1 or an invited guest, we are glad you're here. We want to supply you with 3 or 4 slides of introduction to our work before we get too far into the sauce of our financial results. In doing so, we hope you'll leave with an understanding of what we do and how you can help connect us with nonprofits and individuals who want to grow and deploy their charitable dollars. Next, you'll hear from our Chief Financial Officer, Ken Wyatt. Ken will walk you through financial results related to our 150 donor-advised accounts, plus fund holders, scholarships, nonprofit endowments. As we celebrate 30 years, I know you'll be impressed with our growth. Having worked with over 7 CFOs in my career, I'm confident to say that Ken stands out for his meticulous work, his deep commitment to philanthropy, and most especially his servant's heart. Following Ken, you're going to hear from the Atlanta Consulting Group, whom we've engaged to advise us and our endowment managers while guiding our board's strategic investment planning. Representing ACG tonight is Kurt Hennick, the managing partner of ACG. For more than 40 years, ACG has delivered strategic investment insights, regulatory guidance, client-focused service through their personalized, partnership-based approach. And since joining CFM, I'll just tell you personally, they've made an immediate impact, assessing our managers, reducing fees, and maximizing returns. Tonight, he'll provide a market forecast, and I encourage you, if you happen to have charitable dollars at CFM that are invested with someone else outside of CFM, please have a conversation with me, a member of our investment committee, or meet Kurt independently. I think you're going to be really impressed with the superior performance. Next up will be Warwick Alley, a dedicated volunteer who chairs our grant review process for the Community Trust Fund. Each year, Warwick leads volunteers in reviewing requests for our limited unassigned funds. By day, he's the president of Resolute Wealth Strategies, but at CFM, he's our trusted advisor and friend, offering sharp insights, asking the right questions, and guiding us through complex decisions. Finally, Jane Alexander, our CEO and president, will close out our evening. And yes, she'll be the only thing standing between us, 2 signature cocktails, and champagne. Jane's leadership has been pivotal to our growth, driving remarkable progress during her tenure, which now spans a third of the foundation's history. So let's get started with a quick overview of what we do. CFM serves 22 counties. Here you can see a map, and every single county of Mississippi is served by a community foundation. At CFM, we proudly serve nonprofits by managing their endowments, allowing them to focus on what they do best. Whether it's Stewpot, the Junior League, or the state's premier symphony, our role is to ensure their financial stability so that they can continue enriching our community through music, art, and service. After all, a cellist's time is best spent playing, not worrying about asset allocations. We proudly serve as the fiscal sponsor for community events and programs, providing essential behind-the-scenes support for major events like the St. Patrick's Day Parade this past weekend to the Mississippi Book Fest, which attracts funding from all across the country right here to Mississippi. CFM provides all the crucial administrative work from managing annual funds and processing donations to ensuring PCI compliance and issuing vendor payments. This allows those organizers to stay focused on what matters most, delivering incredible performances, engaging acts, and bringing inspiring authors to all of us to enjoy. So our impact, we are a lean, high-performing team. I want to focus on one corner of this slide, which is the bottom right. With an operating cost of just 1.3%, we are well below the industry practices, delivering exceptional value while maximizing impact. And we are proud to say that we deploy a lot. In fact, our grants to the community this past grant cycle went up 13%. While the Community Foundation for Mississippi always strives to fund more of the compelling grant requests we receive, the truth is the majority of our grants come from you, the generous individuals in this theater. Your philanthropy drives the real change, and for that, you deserve a big round of applause. Just a couple of closing tidbits for you. One of the great things about working with a community foundation in Mississippi is that we offer state income tax credits through the Endow Mississippi program. If you are not interested in a state income tax deduction, I'd also like to make sure that we meet tonight at the program afterwards. Working with a community foundation is not as complicated as it seems. There are 4 or 5 different entry points, and this is difficult to read in the back, but no matter what you're trying to achieve in your philanthropy, CFM likely has an avenue to help you achieve that result. And then to summarize, we help making the community and giving to causes that are important to you very, very easy. As Ken begins to make his way to the podium, I'd like to share one more thing, which is that the average high net worth individual supports 7 to 11 different nonprofits on an annual basis. If that person were audited, that could mean tracking down 30 to 40 different receipts and gift acknowledgments spanning 5 to 6 different tax years. That's a daunting task. And so by partnering with the Community Foundation for Mississippi, we can help you organize, grow, and deploy your giving in a process that's much simpler and easier for the donor. So let's get started with Ken.
Thank you, Jay. Just so you know, if you all are reclining in these chairs, don't fall asleep. I'll be just brief. But I do want to talk about a little bit of the finances of the Community Foundation. And a couple of things I want to show you is our contributions, our grants, our programs. And when you look at this slide right here, the one thing I just want you to see is it's diverse. And that's the main thing I want you to know about the Community Foundation. We have various types of funds, like an agency fund would be like Stewpot. Designated fund would be like the planetarium. A fiscal sponsorship would be like the book festival. Those different types, realize we're not concentrated in one area. We are very diverse in different funds. So this particular slide here is this fiscal year. It's 11 months worth of data. If you go to the next slide, that's last fiscal year. So you see that we are not concentrating in one area. So that's one thing I wanted to see with contributions. It's the same way with grants. If you look at grants, you see that we have various designated, donor advised. And I want to say this about our donor advised funds. We truly have some of the most generous people in this state that give to the Community Foundation. I'm amazed at how much influence our donor advisors have with the different organizations they give to. It's just tremendous, and it's a real testament to the people in Mississippi and how much they give. And so I think we can be very proud of the different grants that come out of the donor advised funds. Same with field of interest, same with designated. And you see that's last year too. So again, what I want you to see, it's diverse. The next thing is program expenses. Now, program expenses might be a little confusing to say, what is that? I mean, how's that different than grants? Well, program expenses are like the back office stuff. We pay the bills of certain things like the book festival, like Hal and Mal's parade. You know, we pay all those bills, we take in all those donations and give the tax receipts. So that's what program expenses are. So when you look at that, there's really only a few types. There's field of interest, which we work with a lot with the Jackson Public Schools. So that's field of interest type funds. Designated would be like the planetarium. Fiscal sponsorships would be like the book festival. So those are various things. And you know, a lot of people think that the Community Foundation is all grants. That's not true. We're really a couple of businesses here. So if you look at this slide, what you see is we're really over a third of our business is these programs. And then the 2/3 are the grants. So that's pretty important to know about the Community Foundation. Here's some pictures. That top left is the book festival. And I think they're working with JPS in that picture. Then you got the planetarium at that top right, which is pretty cool. That was a really neat thing, Kane, that happened there at the planetarium. And then you got the Howells St. Patty's Parade and a couple of those slides. And that middle one is Wells Fest Cares with the music. They're helping a lot of the musicians that are in this state. So they've done a lot of good with that in Wells Fest. So those are different kinds of programs. So now I want you to see this slide. This is a microcosm. What I was showing before was an aggregate of the Community Foundation. This is just us 7 people, our staff. And it's basically our operating revenues and expenses. The main thing I want you to see there's 2 colors. There's blue and green, right? Do you notice that the blue's always bigger than the green? That's a good sign. That means that we are doing surplus. We have surpluses. And what we've done over the past few years is we've been able to aggregate those surpluses and reinvest in ourselves. We put a good chunk of money of our reserves into an endowment, our endowment. That's going to help the Community Foundation continue on in a long-term fashion. And also what we're doing, and you can see it in the budget, you see that green's getting bigger? We're reinvesting in ourselves. And so we're trying to do more, and we're trying to do more impact, and we're trying to get more revenue. So we're trying to reinvest in ourselves. So that's one of the main things I want you to see in that slide. The last slide I have is the total assets. Now this one is very telling. This one shows 1995 is when the Community Foundation started. So we started with 0. And I did a couple of intervals there. So you have 2005, 10 years later, there's 13.6 million in assets. 2015, 38 million in assets. That's 10 years later. Then you only go 5 years, 38 to 59 million. 2025, we're at 92 million. And folks, in 10 years, if we keep this track up, we're going to have over 200 million. So I think you can see from these slides, we're a good investment.
Good evening.
Good evening.
I appreciate the invite to come speak with everybody today. I'm from Atlanta, Georgia. In my role, it takes me across the country We have clients in Canada, Europe. And one unique thing about coming to Mississippi is usually when I'm coming to meetings, I'm coming to a boardroom, and I don't ever get to see the actual impact of what we do. We have such a small part of the success of this. I wish that whole graph was just due to us, but it's not. I'm proud of the work that we've done over the last couple of years in working with the Community Foundation here, and I'm really excited about the changes that we've made that I think you're going to see reflected in the returns going forward. We've worked hard. I think the investment committee's worked hard. I've been invited into homes like Macy's house to speak with the board on potential changes. That is the first time I've ever been invited into a board member's house to speak about a potential, opportunity down the road. So I'm excited to be here. I'm proud to be here. Doing a presentation in 10 slides on the economic forecast today is extremely challenging. So I'm going to do my best to go over a few things. And on this executive summary, what Jay's tasked me to do is kind of give you really a broad overview of, what we see. I'm happy to talk about trends that we're seeing with not-for-profits, as that market's really changed. I'm happy to talk about what we see with the economic growth, what's happening inside of the equity markets, fixed income markets, and I think one thing that Warwick will follow me up on deck here and talk about the alternatives. The landscape for investments has changed. On the one thing that I'll say that hasn't changed is the predictability of the equity markets has continued to be extremely challenging. I added this chart because I love charts, and I thought it was a good thing to show. What this is showing you on the right side is if you go back and look at all your major banks and economists on the right side, and the blue dot on the left side is where the economists thought the market would be at the end of 2023, where the market would be at the end of 2024. Everyone projected the S&P would be somewhere around, call it 5,000. You can see how dead wrong they were, right? Look at the updated assumption in October. The yellow dot, the S&P did breach 6,000 last year, had a tough December, pulled back, but you can just see how difficult it is for even the smartest people in our industry to get this correct. On the following page, what I wanted to show you here is, let's go back 5 years. Where were you? 5 years ago, almost to today, we thought the world was shutting down. We thought there was industries going out of business. The global crisis was happening with the pandemic across the page. Despite all that, despite massive inflation, higher interest rates, one thing that didn't happen, look at the S&P 500. It's up over 80%. The NASDAQ's up over 104%. Unemployment's back to the level that we've seen at kind of historical low levels. So despite how much noise is in the marketplace, one thing that I want to encourage you all to do is what the foundation's doing, which is take a strategic approach to your investments and not try to be traders in this market. What I'll show you is it's nearly impossible to do that on a timely manner and correctly. And before I change this page, we just wrote an ACG Insights. It's on our website if you want to go see it. It's a tale about just staying steady. Don't panic in this market. A key thing that we put on there is if you invested $10,000 in 2005, that $10,000 today would be worth $71,000 if you just stayed fully invested. With corrections, typically the biggest recoveries come right at the end of these corrections. If you miss just 5 of the best trading days of the market, instead of having a 10, 11% return, you have a 7% return. If you miss the best 60 days since 2005, your return is a negative 4%. So I've never met I've met one person that has timed the bottom of a market or right before a correction. I've never met someone who can get you back in. So what we do at the foundation is really take a strategic approach to investments. We look at the risk return. The benefit that the foundation has, and I say this at every investment committee meeting I go to, is that it's not like your personal money. This asset's perpetual. Not only do we want to continue to benefit the local community with the impact that these dollars can do, we want to continue to grow that impact so it's on much longer than I'm going to be around, that the board's going to be around, that someone else will have this pool of money that will continue to benefit the community much into the future. The following page starts talking about the equity markets and the economics. Even though we can all agree that no economist out there has been able to predict the equity markets on a high level, what all economists today will be in an agreement to is that there's a lot of disruptors. one of the biggest disruptors is protectionism, whether it's tariffs, whether it's quotas, subsidies, regulation. We are all facing a big burden going forward, and that is coming from uncertainty. I reserve the right, whatever I say today, when I turn my phone back on, that it could be completely wrong, because the news is traveling so quickly, and investors are being very quick to try to time this market, and they're acting much more irrationally than what we like to see. Big headline in the news, inflation. Everybody's scared of it. I live in Georgia. I think it's still the poultry capital of the world. Eggs are up 50+% year over year. What they're also not telling you is that inflation at 3.1%, even though it's above what the Fed's target of 2% is, it's the lowest we've seen since April of 2021. So inflation is moving in the correct trajectory. The tariffs is the big T word right now that everybody's wanting to know. How is this going to impact the market? I had a big debate with my wife the other day who was reading something, even though she didn't want to have it. Our expectation is that tariffs, we'll see what happens. We think it could have about a 1 to 0.5% impact on inflation over 2025. I say that because the debate is are we entering into a long-term trade war, or are we entering into a negotiation standpoint that this administration wants to do to come back? One thing I will tell you that I do not believe this is going to be one long trade war with the rest of the world, even with April 2nd coming with reciprocal tariffs, is I think this administration really cares about what the stock market does. I think he uses the stock market to gauge his success. And I think that if these tariffs are overly burdensome for the equity markets, that he will pull back and renegotiate some of those tariffs. So we will see what happens. But the big picture and the long story is it doesn't matter. Charlie Munger, if anybody knows Charlie Munger, he's always good for a good quote or two, worked with Berkshire Hathaway. He once said that the success of the stock market is not what you buy or what you sell, it's just time, right? Just being invested in the market is really the overall objective here. On inflation, my last point that I'll mention there is you really have to dive in and peel down the layers of inflation. There's two areas that are really negatively impacting inflation. It's shelter and it's food. Shelter's gotten expensive. But if you look at airlines, if you look at gas prices, there are some good signs out there. And the difference between headline and core inflation is core inflation excludes food and energy. And so we're seeing it move in the right direction. What we think that the Fed's going to do is continue to keep rates flat. We think that we, like the rest of the world, believe that there's probably going to be 2 cuts later on this year. But we believe the equity market's kind of entering into a trading phase. And hopefully, at the second half of the year, we think this market will continue to turn up once we kind of eliminate some of the noise. The following slide is, Jay pushed me to do this, but artificial intelligence, AI, it is the headline. Everybody wants to understand what is AI, how is it changing the market, and why is the US so dominant in this space? January, DeepSeek comes out, freaks out the whole AI market because all of a sudden there's a competitor. Raise your hand if you thought China wouldn't come out with a competitor to AI. We all knew it was going to come. But what I wanted to show you here is when we talk about AI, it's much bigger than just the NVIDIA chip, the $80 billion that Microsoft's putting in the infrastructure. There's a lot of ways that we're talking to your management team and your individual manager of the foundation on how they can take advantage of this big boom in AI. On the left side is data centers. A couple interesting stats that I like about data centers is if you think about the global supply of data centers, there's about 10 to 11,000 data centers built out globally. The United States has about 49% of those. If you designate and look at these data centers and say just the ones that are powering AI, we believe that the number is closer to 60 to 70% of all data centers running AI are based here in the United States. There's a lot of different ways that you can play inside of this real estate market, the data center market, whether it's real estate, tons of different kind of maintenance structures that you can do, materials. We think that all of those are going to be benefactors to this AI boom. The other side is power. This is the reason why Microsoft and some of these companies are putting tons of expenditures in building out the power grid. It is expected by 2030 that 10 to 20% of the entire US use of energy will be used just on powering these data centers. When you start to have that much kind of infrastructure, you have to build it out. You have to have companies that can maintain it. You You have to have utility companies that are working in this industry. So when you think about AI, I don't want you just to think about the Microsofts, the Amazons, the Googles, or just even the NVIDIA chips. This is truly touching almost every component of the market. I did a presentation about 2 months ago, and I asked the room how many people had used a component of AI, and I was shocked. About 60% of the room had said they had used something, whether it was ChatGPT or their software. Had a doctor raise his hand and tell me that his billing system at work is now using AI to help bill customers. 3 years ago, not one single hand was raised. So I really think AI is not a fad. It is not going away. And the US is going to benefit by continuing to be the leader in AI, whether it's in real estate, utilities, material stocks, or even on the power side. So I'm really excited about kind of what that's going to bring to the market. Couple pages on equities. The dominant story, unless you've been living under a rock, is the Mag 7 stocks. These 7 stocks have been a concern of ours, not because of who they are or how they are, but the concentration that we're seeing in the market with these 7 stocks. So the Mag 7, it's the Facebooks, Amazon, Netflix, Googles, Teslas. If you look at those 7 stocks on the left side, the green line is just those 7 companies. Those 7 companies last year were up, call it 50%. If you remove those 7 stocks from the S&P 500, you can see that the S&P 500 was only up 10%. I'll tell you, the international equity markets last year were up 17%. So you remove 7 companies, that's the impact you're having to the market. One thing that we're concerned with is valuations. One thing that we're concerned is about earnings. But I will tell you, those 7 stocks are not going away, and I think they're great stocks. My concern comes with the concentration that investment managers or even these index funds that folks are investing in are in those 7 companies. So my example is those 7 stocks, if you just take the top 10 stocks of the S&P 500, it makes up 30% of the S&P 500. If you said, Kurt, here's $100, I want you to invest in just large cap growth stocks in the Russell 1000 Growth Index, it's 50% of that index. So I believe that investors are chasing these high returns. They're over-concentrated in a lot of these stocks. But this is not me telling you to go sell those stocks. I think these stocks are great stocks. I think there's just a lot of undervalued securities out there, specifically the ones that I put up there, small cap value stocks and even international equity stocks. The reason these stocks are up so much is if you look on the bottom right side is they're following earnings growth. There is very large earnings growth with these growth stocks. What's not on this page that I think is interesting is last year, the S&P 500 posted $3.8 trillion of before-tax profits. That's up 51% since 2019. The question we have is how impactful is this administration going to have to earnings growth? We believe earnings growth will slow down, but overall, I still think earnings growth is going to be very promising and a good asset class, I think, in U.S. equities. Fixed income, sleepy here. I'm glad you're not reclined in your seat because fixed income has not been an area that most people want to talk about. We called it kind of a beta desert over the last couple years, and the reason for that is interest rates were so low, right? Foreign countries had negative interest rates. You couldn't make money in your checking account. You couldn't make money in your savings accounts. And you couldn't even make money investing in just your local municipal bonds or CDs. Well, that has changed. Today, the difference between equity forecast and fixed income forecast is fixed income is rather predictable. And it's rather predictable by looking at the starting yield of your fixed income investments. So right now, just take a bond at 4.9%. You would look at a forward 5-year return of that bond to be about 5%. We haven't seen that in quite some time. If you actually look over the history of the fixed income market, you can see where yields have come. So I like where fixed income is. I think it's giving not-for-profits. When rates were so low, they were chasing returns in other places. All of a sudden, fixed income, it can be an asset class back in the portfolio to help and dampen some of our volatility without being forced into the equity markets. The only downside with fixed income right now is not to get too analytical with you, but spreads are so tight. And what that means is how much yield are you picking up by leaving the treasuries and going into, say, investment-grade corporate credit. To give you an example, if you go to investment-grade corporate credit, say you can get 4.2% in a bond. in the 10 years at 4%. That 20 basis points is not a lot of extra yield that investors are moving to, ignoring some of the risk potentially in fixed income. If we don't go into recession, I think we'll be fine. But there is a concern if you read about spreads, it's kind of what people are talking about. And then the final, let me round it off by alternatives. If you look at any publication out there about what is the not-for-profit world doing, the not-for-profit world is exploring other asset classes for one major reason. Most people have traditional equities with a 10-year forecast of, say, somewhere around 7.5%. If you have a foundation that you're trying to keep perpetual, so say you need to get a 6-7% rate of return, you can't do it with just fixed income and equities. So we're exploring additional asset classes to help us improve that risk return, as well as maybe get a little bit extra return. A couple areas we're really excited about is infrastructure. I think we're going to continue to have a need in this country to build out our roads, as well as build out our energy. But one thing I will tell you is Warwick comes up, when you look at the alternative space, you've got to find superior managers to find it. There's a huge dispersion amongst different active private equity or private credit managers. So it takes a lot of due diligence. We've spent maybe a year or so kind of seeking out some of the best managers. And so, I really like where the foundation's positioned today. I've seen hundreds of our clients, not-for-profit clients, and I can tell you there is no better positioned foundation today than where the Community Foundation for Mississippi's positioned. So I'm just extremely excited. I'll be around. I'm happy to answer any questions that you all may have.
Yeah, great. So, can you all hear me okay?
Yes.
I'm Warwick Alley. I wear two hats here at the Community Foundation. One of them is I'm on the investment committee. And just to kind of dovetail a little bit of what Kurt said, we as a committee really have been looking for the past year at the use of alternatives. And two major alternatives that we've been looking at are private equity and private credit for a number of reasons. Number one, to increase the returns of the portfolio. So Kurt kind of talked about how we look at the assets that we have so that they can grow, right? He helps us make that impact and how we can do that and do it in a way that is the least risky. Okay, so those of us in the investment business know what he's talking about. I think we just had our first little foray into private credit and to private equity within the portfolios. So we're just taking little baby steps in it. If you have any other questions, feel free to ask. So my second hat is I'm chair of the grant committee. And so, what impact do the grants make, right? And this is pretty amazing. It's in the annual report, but we paid $9.8 million in grants in the last fiscal year. And that's over 657 different grants. And that's 13.4% greater year over year, which is pretty amazing if you think about it. Of those, 3.1 million are donor designated grants. And these are in areas like education, they're in areas like science, arts and culture. Those are three of the largest kind of sectors of the market. So what are some grants that we've done that y'all may be familiar with, right? We've mentioned one a lot, and that is the book festival. So Community Foundation is the lead sponsor for the Mississippi Book Festival. We saw it from its infancy into now. It's just a major attraction and a major draw for not only Jackson, but for Mississippi, as it should be, right? People know us as a literary state. So that's one. Two, if you drive the Waterworks curve, you see that beautiful sign, the Mississippi Museum Trail, connecting the two museums downtown with LaFleur's Park and the Children's Museum. and the Natural Science Museum. And personally, I use it all the time. So it's wonderful. And then finally, there's been some press lately. Y'all may have heard about it. I think the Northside Sun had an article about it. It's been in the news. And that is our multi-year commitment to Krigler Park. So the Eudora Welty Library is going to be torn down. It's going to be a wonderful green space there that people can gather. So these are some of the impacts that the Community Foundation is making in our own community. Keep in mind, we service 22 other counties, and we're seeking opportunities to make these kind of impacts. So anyway, we'll turn it over to Jay. Thank you all for being here.
So I'm looking at my list that Jay left for me, and I have 5 things. First, thank you. Thank you all for being here. Thank you for being our partners in this wonderful work that we are privileged to do. I want to say a special thank you to members of our founding board who may be here. The Community Foundation was founded in 1994 and 95. So we incorporated in 94. We finished our bylaws and started in 1995. And quick bit of trivia, Delbert Husband wrote our bylaws, just so y'all will know, Mark. He said, don't blame him. But we were actually founded as a project of the first alumni class of Leadership Greater Jackson. So we've had a really great history in the Tri-County area. In 2017, we expanded our footprint, as you have seen, to cover 19 additional rural Mississippi counties. But none of that would have happened without this visionary work of people who basically used as their topic for their Leadership Greater Jackson project, why doesn't Jackson have a community foundation, and what needs to happen in order to have one? So as you can see, over the last 30 years, it has been transformative to the landscape of philanthropy, but also in the types of projects that I think we're seeing happen in this community and in other communities across Mississippi. So I have to say thank you to the founders who were visionaries, and they've had an enormous impact on this community. We have some past board members here. We have a lot of current board members here. If you are a current board member, would you just wave? Because I don't want, so thank you. See, they're still interested in the work we do, and they get to hear about all this at board meetings. And then we have committee members as well. The Community Foundation has a wonderful board, but we don't have enough board members to fully staff every committee that we have. And so the way that we get community voice into the Community Foundation is by inviting members of the community to serve on different committees. So that's primarily the Grants Committee, Investments Committee, Development Committee. These are some ways that if you are interested in joining our work in other ways, we can put you to work as a committee member, and we would love to have you. I was thinking today about 30 years ago. I am wearing pearls because this is our pearl anniversary, just so y'all will know. A little bit more than 30 years ago, a group of people started meeting. My mother was one of them. They started meeting around folks' dining room tables. And y'all know this is how the work gets done, right, in Mississippi especially, to talk about the future of Fondren. They'd had some kind of major economic hits. People were a little bit worried about what was going to happen on the retail landscape. McRae's had not quite sold, but it was about to sell. And so some neighbors started meeting and said, let's just start talking as a group of interested neighbors about what Fondren needs to become, and what do we need to put in place now to stop erosion from happening in our neighborhoods, to keep people coming here, living here, working here, eating here, playing here. And we stand today in a testament to an overnight success that took 35 years. When people say to me around the state, we want to be like Fondren, I'm like, start 35 years ago. Sit in dining rooms with people, get groups of neighbors together to start talking about what you want to preserve, what you want to change, and what it's going to take to do that. And philanthropy, like the Community Foundation, can be a partner in that work. We can help convene, we can help, lead meetings, we can provide information to folks, we can try to help you figure out how to fund work that needs to happen in these communities. And mostly we can galvanize other folks who live in these communities to basically fund the places that they live, make communities their legacy. Some of the grants that we are able to give out come from the John and Lucy Shackelford Fund, which was a legacy given to us by two Mississippians who did not have direct heirs but decided to make the community their legacy. So we've been very grateful to demonstrate the power of community giving through that fund. But we have so many donors who some are so we have our videographer here today because we've been collecting stories for our 30th anniversary. Our hardest story to tell is of our individual donors, because the reason they work with us is because they don't really like to take the spotlight. They believe in the work they do, not in the profile that they put forth in the public. So I have all these great donors that I don't need to tell their stories about who they are, but they let the work speak for itself. So I do want you to be thoughtful in your daily life, in the people you talk to, in the impact that you have on people, to say, what do you need to do to find your passion, and what do you need to do to fund your passion? Because the Community Foundation has been doing this work now for 30 years. We look forward to being here another 30 years. I've been here almost 13 years, and have been privileged to see the exponential growth of as this word gets out, as our success builds, as we have great partnerships with our investment advisors. We've just been really, 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 really lucky, and we work hard to make that luck happen. So I want to invite you to come next door. We're going to leave out of these doors because it's fewer stairs, and the more direct route to champagne, 2 specialty cocktails, and things to eat. But mostly, I want to thank y'all for being here and for being part of our success story.